So let's review everything that we've learned in Chapter 2's job costing. First, we learned about a job cost sheet. Notice a job cost sheet includes beginning work in process of jobs, that's any costs from prior periods, direct materials, direct labor, and overhead applied this period to get the total job cost. So the company we're going to be working with, they had 3 jobs this month, and originally they are called jobs A, B, and C. It says job A began last month and incurred $1,000 in costs. So if job A began last month and had $1,000 in costs, that's going to be my beginning work in process. So I'm going to come down to job A under beginning work in process, and I'm going to put the $1,000. Next, it says direct materials for the month. Job A had 500, job B had 1780, and job C had 1000. So we're going to go ahead and add those in here as well. Job A had 500, job B had 1780, and job C had $1,000. Notice that goes on the direct materials line because this is the direct materials added this period. Now we have the direct labor for the jobs. All 3 jobs will get direct labor. Job A will get $1,125, job B will get $1,335, and job C will get $750. Overhead is applied at a rate of 120% of direct labor. This 120% is our predetermined overhead rate. So that is the rate that we're going to apply overhead. So that's 120% of direct labor. So we will take direct labor for job A, which was $1,125, and multiply that by 120% to get the total amount of $1,350, which is going to be my overhead applied. For job B, my direct labor was $1,335. We're again going to multiply that by 120%, and we get 1,602. For job C, my direct labor was $750. We're going to multiply that by 120%, and we get $900. For the total job cost, we're just going to add down. If we take all of the costs from job A, we're going to take the 1,000 plus the 500 plus the 1,125 and 1,350, we get 3,975. For job B, we just have direct materials, direct labor, and overhead, and that gives us a total of $4,707. And for job C, we also have direct materials, labor, and overhead, and we get $2,650. So these are going to be our total job costs right here. Now it says job B was finished and sold for $5,000 on account. So job B has been finished. Job A has also been finished, but it was not sold. Job C is not finished. Then it says actual overhead for the period was $5,000 and should be charged to accounts payable. We'll use some of that information in just a few minutes. Right now it says what is the total amount of overhead applied to all 3 jobs. That means this line right here. So we're just going to add the overhead from job A, B, and C together to get the total amount applied to the job. So job A was $1,350. Job B was $1,602. And job C was $900. For a total amount of overhead of $3,852 overhead applied. So remember, it says job B was finished, job A was finished, job C was not finished. So which job is in work in process and what is its total job cost? That's going to be job C, because job C has not been finished. So job C is in process, and the total cost of that job is $2,650, and that comes from the direct materials, direct labor, and overhead from this period. I'll just make those bold so we can see them a little better. And it says which job is in finished goods inventory and what is its total job cost. So which jobs would be in finished goods inventory? We have job B that was finished, but it was also sold. Job A was finished and not sold. So they'll both have gone to finished goods, but only job A remains in finished goods because job B was sold. So we have job A in finished goods, and the cost was $3,975. Remember, a job can only be in one inventory account at a time. It's either going to be in work in process, finished goods, or it's going to be an expense as cost of goods sold. So it can only be in one place at a time. So which job is in cost of goods sold and what is its cost? Here we have job B because it was sold, and the cost for job B is $4,717. Now remember, when we apply overhead, that is based on an estimate, because we don't always have the costs for overhead until the end of the period. Now we have our actual overhead and we can compare, because the goal is to make those similar, right? We want to make sure that they balance or that overhead is zero at the end of the period. So we're going to compare applied overhead, which we said was $3,852. That's where we calculated it in this line at 120% of direct labor, and we showed our work right here where it's $3,852. And actual overhead, it says in this line up here, actual overhead for the period was $4,000. So actual overhead is $4,000. If we compare those two, we have a difference of $148. Since applied is less than actual, we say it is underapplied. If applied was more than actual, it would be overapplied. So now that we've done all the calculations, it's time to do journal entries. We have to do journal entries for every single step along the way. The first thing we need is the cost from last month. Do we need a journal entry when we're recording beginning work in process? And the answer is no. We don't need any journal entry because these are the costs that were recorded in prior months that have just been rolled over to the current month. So we never do a journal entry for that. We do need to do a journal entry for the direct materials. We said the direct materials were applied to the jobs, as $500, $1,780, and $1,000. So we're going to call this journal entry 1. And in journal entry 1, we are going to debit work in process inventory. We're going to add the 3 different sets of direct materials, 500, 1780, and 1000 together, and we get 3,280. Direct materials come out of raw materials inventory. You notice there is not an account called direct materials, right? Because that's a concept of what it is, not where it comes from. Okay. For our second entry, we're going to do the direct labor for the month. Again, we have jobs A and B. Direct labor gets recorded as a debit to work in process because what we're doing is we're adding the direct labor cost to the job, so we add it to work in process. We're going to take the cost for job A, job B, and job C and add them together. Work in process comes from factory payroll, or you could have used wages payable here. That would be fine too. So job A was 1,125. Job B was 1,335. And job C was $750. The third entry we need is to apply overhead. We applied overhead down here at a rate of 120% of direct labor. We also calculated it for the 3 jobs, and we said that it was $38.52. When we apply overhead, it also gets added into work in process, so we debit work in process. We said that was $38.52, and it comes out of overhead. Here you can use manufacturing overhead, factory overhead, or just overhead. Any of those would be fine. I'm going to save a little bit of time and copy that for me. Okay. What's next? It says job B was finished and sold for $5,000 on account. We'll worry about the sold part in a minute. Job A was finished but not sold. So let's worry about the jobs that were both sold. Okay? So if they are sold, they move from work in process to finished goods. So that means we want to debit finished goods inventory. And we want to credit work in process because that's where it's coming from. So we're removing it from work in process because it's been completed, and we're moving it to finished goods. This is also your cost of goods manufactured. Remember that from chapter 1? We're going to need it again, but for right now, that's where we get cost of goods manufactured. So job A, the total cost was $3,975, and for job B, the total cost was $4,717. So we will record a debit and credit for $8,692. Job C was not finished, so we don't need to do an entry to move that anywhere. It says actual overhead for the period was $4,000 and should be charged to accounts payable. To do that, we would debit overhead for $4,000, and we're going to credit accounts payable, because it told us to in the problem, for $4,000. Other things you might see used here as a credit, you might see cash, you might see depreciation, which would be accumulated depreciation. You might also see insurance, where we're using insurance that we've already paid in advance, and in that case we would credit prepaid insurance. So just be aware of what the problem says in that case. All right, so we've recorded actual overhead. Now we need to deal with job B being sold. If job B was sold for $5,000 on account, anytime we sell something, remember there are 2 transactions. There's the seller side and there's the cost side. So there's the customer, what we charge the customer, and then there's the seller. And it says it was sold for $5,000 on account. If it's on account, that means we haven't received the money from the customer. So we're going to debit accounts receivable for $5,000, and we record sales for $5,000. So that's going to be for the amount of the sale. We also have to record the cost of the job. So the cost goes into cost of goods sold, and the cost of job B was $47.17, and it's going to come out of finished goods inventory. We're going to move it from finished goods inventory because we no longer have it, so we don't want to show it on our records. And that comes from the job B total cost. The last journal entry we need to do is to correct this actual and applied difference. We said there was a difference of $148, and we set it as under applied. Under applied means we didn't charge enough cost to the job, and for simplicity, all adjustments are going to go directly to cost of goods sold. If it was under applied, we need to charge more cost, So we're going to debit cost of goods sold for 148, and we're going to credit our overhead account. Again, you could use factory overhead or manufacturing overhead. Just make sure that you're consistent in all your journal entries with what titles you use. That's it. That's how we handle job costing. I hope this helps. If you have any questions, just let me know.